Hey wealth builders, and welcome back to The Bemused. Today I'm going to be covering 3 tax breaks: the American Opportunity Tax Credit, the Lifetime Learning Credit, and the Student Loan Interest Deduction. If you're a college student, a recent college graduate, even a college dropout, or you're the parent of one, you're going to want to know about these tax breaks, so make sure you keep on watching. We've had a ton of new people join the squad over the past couple of weeks, so if you're new around here, hello! I'm Akiva, and I'm a 21-year-old financial planner. I run this channel along with my boyfriend, Mishak, and together we talk about all things personal finance for young adults just like us. We are so glad you're here joining us on this journey. So I've seen a lot of misconceptions floating around out there on the interwebs about the tax credits and deductions that are available to college students, like this one, for example. So it's time to clear the air and learn the facts. There's a lot to know, but I'm going to try to keep this at a high level. First up, the American Opportunity Tax Credit, which I will hereafter refer to as the AOTC, because there's but so many times you want to hear me say American Opportunity Tax Credit before leaving the video. So here's the overview. The AOTC is a tax benefit related to money that has been paid for college expenses. As it states in the name, this is a tax credit, which means that it directly reduces the tax that you owe dollar for dollar. On top of that, 40% of the credit may be refundable. So for example, this means that if your tax owed before the credit was $1,000 and your AOTC amount is $2,000, you could be refunded up to $800, which is 40% of $2,000. So how much is the credit? The maximum credit allowed is $2,500 per student. This represents the sum of 100% of the first $2,000 of qualified education expenses plus 25% of the next $2,000 of qualified education expenses. So you would have needed to pay or taken out in student loans at least $4,000 to claim the full amount of the credit. So what are qualified education expenses? For this credit, it means tuition and fees and books. It does not include room and board, health insurance, or anything like that. You must also have been enrolled in school at least half time in a degree-seeking program to claim the credit. To be able to claim the AOTC, the law also requires that your school give you what's called a 1098T, which your school will give you by January 31st, assuming they're following the rules. So who can claim the credit? Generally, it's whoever's claiming you as a dependent on their tax return. So more often than not, that means your parents. This credit can be claimed for a maximum of only 4 years. So if you've been in school longer than 4 consecutive years and you or your parents have taken this credit on your behalf for each of those 4 years, you can't take the credit. Also, there are income limitations. So if you or your parents make more than $180,000 of income if their filing status is married filing jointly, or more than $90,000 for any other filing status, you can't claim the credit. Unfortunately, you also can't claim the credit if you're a non-resident alien. Oh, and it's also important to note that you can't take the AOTC if the student has been convicted of a felony for possessing or distributing a controlled substance. Just FYI. Now let's move on to the Lifetime Learning Credit. The Lifetime Learning Credit is another tax benefit that's related to money that's been paid for college expenses. Again, this is a tax credit, which means it directly reduces the tax that you owe dollar for dollar. However, unlike the AOTC, this credit is not refundable, so it cannot trigger a refund. So how much is the credit? Also, unlike the AOTC, the maximum credit allowed is $2,000 per return. So not per student, but per return this time, which represents 20% of qualified education expenses up to $10,000. So you would have needed to have $10,000 of qualified education expenses paid in order to get the full $2,000 credit. So what are qualified education expenses? Just like the AOTC, it's just tuition and fees and books, so no room and board, no health insurance, etc. But unlike the AOTC, you don't have to be in a degree-seeking program in order to claim the credit. You can claim the Lifetime Learning Credit for courses that you take to acquire or improve job skills, even if it doesn't lead to a degree. And again, you must have received your Form 1098T from your school, which your school will give you by January 31st. Who can claim the credit? Like before, whoever's claiming you as a dependent on their tax return is the one taking the tax credit. Unlike the AOTC, the Lifetime Learning Credit can be claimed for an unlimited number of years. This will be one of the tax credits that I'm going to be claiming on my taxes this year because, as you guys know, I have completed my 4 years of undergrad and I just finished up grad school, so after 4 years I can no longer take the AOTC, so I'll be taking the Lifetime Learning Credit. And unlike the AOTC, the income limits on this credit are lower. $134,000 for married filing jointly and $67,000 for us single folk. The most important thing to remember is that you can claim either the AOTC or the lifetime learning credit per student, but not both. No double dipping. And lastly, the student loan interest deduction. The student loan interest deduction is a tax benefit related to, well, student loan interest that's been paid. Unlike the two tax credits that we discussed earlier, this benefit is a deduction, which means it reduces the amount of your income that is subject to tax. How much is the deduction? It's the actual amount of interest that you paid within the year, subject to a cap of $2,500. Your student loan servicer will issue you a 1098-E, which is different from the 1098-T that we discussed earlier, showing you how much interest you paid throughout the year. Who can claim the deduction? Whoever took out the loan. So as you guys know, my dad took out a Parent Plus loan for me when I was an undergrad. So even though I'm the one who's been paying back the loan, my dad is the one who's getting the student loan interest deduction on his tax return. The student loan interest deduction can be claimed for an unlimited amount of years, and the income limits are $165,000 for married filing jointly and $80,000 for the single people. Now you can take this deduction in conjunction with either the AOTC or the lifetime learning credit. So that's what I'll be doing this year. I'll be taking advantage of the student loan interest deduction and the lifetime learning credit. For more information on tax benefits for education, check out the IRS publication 970. I don't know if they've updated it for the 2018 tax year yet, but I'll link to the most current version I can find in the description box below. Let us know what tax questions you'd like to have answered in the comments below, whether on anything we discussed in today's video or something totally separate. And if you haven't yet, don't forget to hit that subscribe button and turn on the notification bell so you never miss when we post new videos. As a reminder, we're sharing short tax tips every day in the month of January over on our Instagram page to help you own your taxes this year. So make sure you check us out over there. Thanks so much for watching, and I'll see you guys in the next video.